The name of the strategy, it's called APA strategy, and long form of APA strategy. I hope you guys are in a quiet place. Just in case you aren't in a quiet place, you can mute your microphone so that everyone can hear very well. And just in case you want to speak, you can unmute, then you can ask your questions. So then,
Recording in progress.
The name of the strategy, it's called APA strategy, and we only deal with pure price action and only price action. So all the results that you have been seeing on any media of ours, maybe Instagram or Telegram, they are results from pure price action and nothing else. So in our first session, we'll be looking at the market structures we usually use in our strategy. So the first structure is called invalidation. I'll be illustrating, then later we will check out on the live chat. So let's say we have this downtrend right here. Let's say we have a downtrend, and at this time we have a downtrend. Let's say price gets to break our structure right here. So after price breaks our structure, that's a confirmation that we have a high possibility of changing the direction of the trend from a downtrend to an uptrend. Okay. Also, just in case we have an uptrend, then price gets to break our structure. That means we also have a high possibility of changing the direction of the trend. So if we're shifting from a downtrend to an uptrend, that means we are supposed to be looking for a buy trade. And our target will be on this structure right here. This structure is what we call invalidation. So the invalidation is the second last structure. Right here we have our last structure, then we have our second last structure right here. So we'll be expecting price to create some lows, then respect our invalidation so that we can proceed creating more highs to the upside. So that's an example just in case we have a downtrend. And if we have an uptrend, it's also going to be the same. So let's say we have an uptrend. We have an uptrend right here. Then price gets to break structure. So after price breaks our structure, that means it's a confirmation that we are supposed to start looking for a sell trade. And as usual, we'll be looking for our invalidation point. Remember, we say that our invalidation point is the second last structure. That means this is our invalidation point. So this is our last structure, and right here we have our second last structure. So price has a possibility of creating some highs, respecting our invalidation point so that we can proceed creating some lows to the downside. So let's try to go, let's try to get into the live chat and check out some live examples on the invalidation. So let's try to look for examples. So right here we have this example. We have this example right here, whereby price was making highs. We made a low. We made a high. Made a low. Right here we came to break structure. So after breaking structure, price came back to respect on our invalidation point. Price came to respect for the first time, then price came back to respect for the second time. Right here, that's when we had this sell trade right there. And also, let's try to look for more example so that everyone can understand. Let's try to look for more examples. And just in case anyone is having any question, you should be free to ask. Also, right here, we have this other structure. So what happened is that price was creating lows. We made a high, we made a low, we made a high, then we came to break structure right here. After the break of structure, price made some lows, but price came back to respect on our invalidation point. That's when we had this sell trade right here. Are we together till there? Any questions? Maybe.
None.
No, understood.
Okay, then that's great. So let me try to add one more example, just in case anyone didn't get the point. And also all of these structures are found in all time frames. So even at the time that you're trying to backtest, you should be free trying to check on all time frames. Also right here, we can see that price was creating lows. We made a high, we made a low. Price came to break structure. After breaking structure, price came back to respect our invalidation point. And we had this buy trade. Are we together till there?
Yes, for me.
Okay. So that's all about the invalidation. Let's try to check out another structure we are going to learn today. It's called the new invalidation. It's called new invalidation. So let's say we have this downtrend right here. We are creating lows, and at the end of the day, price gets to break our structure right here. So after price breaks our structure, we usually wait for price to respect our invalidation point right here. Okay. We usually expect price to respect our invalidation point. So sometimes price could play a little bit different, whereby price could create some lows, and at the end of the day, price could proceed creating some highs. That means we have missed our entry right here. So if we have missed our invalidation point, that means we are going to shift our anticipations from this structure, from this invalidation point to this structure right here. So this structure right here is what we call the new invalidation. Is what we call the new invalidation right here. Is what we call the new invalidation. So we'll be expecting price to create some lows, respect our new invalidation so that we can proceed to create some highs. And also on the new invalidation, we usually have 3 examples. This is the first example. Let's try to check on the second and the third example. So on the second example, let's try to place a different color. So let's say price could break our structure. After price breaking our structure, price could start creating some lows whereby price could break our invalidation point. What I'm trying to say is that price may disrespect our invalidation point, then proceed to create some highs. That means this structure right here will be our new invalidation right here. this will be our new invalidation, whereby price has a possibility to respect our new invalidation so that we can proceed creating more highs. So that's our second example. And our last example on the new invalidation is that price could, let's say we have this downtrend right here. We have a downtrend. Then price could, let's say, break our structure. We have our invalidation point. So price could respect our invalidation point right here. Then we could proceed creating some highs. So on this structure right here, price has a possibility of coming back and respecting this structure again so that we can proceed creating some highs. So this structure right here is what we call the new invalidation. So on this third example, my point is price as a is allowed to respect the same price level more than once, more than twice, more than thrice, even sometimes even more than 4 times. It's something that happens in the market, and we usually try our level best to take advantage of it. So those are examples, just in case we have a downtrend. And if it's an uptrend, it's also going to be the same, but vice versa. Let's say we have this uptrend right here. Then price gets to break our structure. So after price gets to break our structure, we usually have our invalidation point right here. So price could create some highs and then proceed creating some lows. That means we have missed our invalidation point. We have missed an entry. So this will be our new invalidation, whereby price has a possibility of respecting this so that we can proceed creating more lows to the downside. And that's our first example. Let's try to check on the second example. So on the second example is that price has a possibility of creating some lows and also breaking our invalidation point, like actually disrespecting it. Then price may proceed creating some lows. So this structure right here is what we call the new invalidation. So price has a possibility of making some highs, respecting our new invalidation so that we could proceed creating some lows. So that's our second example. Let's try to check on the third example. So on the third example, let's say we have our trend, our uptrend, then price gets to break our structure. So price may actually respect our invalidation point, then proceed creating some lows. So this right here is what we call a new invalidation. Price has a possibility of respecting our new invalidation right here so that we can proceed creating some lows. And also price has a possibility of respecting the same price level again. So it's something that is very, very common in the market. So let's try to go into the live chat and check out some live. So right here, we have an invalidation. As you can see, we have this invalidation. So like price was making lows, like we had a low right here. We made a high, we made a low, we made a high. Okay, this example isn't accurate. It's not an accurate example. Let's try to look for a more vivid example. And just in case anyone is having any questions, you should be free to ask. You should be free to ask.
I have one maybe whilst you're looking for an example.
Yeah.
So in your explanations, you said there are three scenarios for a new invalidation. The key idea for it to be termed a new invalidation is the anticipated original invalidation does not obey. It's either, or actually it could obey, but then it's either it'll either bound it would either reverse before the invalidation point or after the invalidation point or at the invalidation point, right? And only the at the invalidation point scenario is when it can go up, come back, and bounce in the same area for more than twice, as you indicated. Now the question is, for the sake of the exact, it goes, it comes back, it obeys, goes up, comes back down, and obeys. Do we say it's only invalid once the lowest structure is broken? I don't know if you understood.
Okay, let me try to check if I got your point. You're trying to ask like
Sure.
on the invalidation, I mean the new invalidation, we have three examples. And your the last example, I tried to say that price can respect more than once and more than thrice, right?
Yes.
Like,
Yes.
let me
Yes.
try to illustrate so that everyone can understand. On the last example, I
Perfect.
said that just in case we have an uptrend, and let me try to, let's say we have an uptrend, then price gets to break our structure, we have our invalidation. Let's say price gets to respect our invalidation right here, then drops. Then I'm saying like price has a possibility of respecting again and again. So on this part, my point is that price can respect any of our structures more than once. It could be the invalidation, it could be any new invalidation. Maybe it could be the first example, the second, or even the third. So it could play on each instruction.
Okay. And then maybe my last question, if I could, would you say that the only time you do not anticipate this to be an entry is when structure breaks beyond the highest high? Like in this scenario, the highest high, the second highest high is the one that was the invalidation. And we said it will repeat to bounce as long as the structure is obeyed. But the question now is, if it doesn't and structure goes beyond this high, this highest peak, would then we no longer consider the new invalidation?
I haven't got your point very well, but let me try to, maybe I got it. You're trying to ask like what will we anticipate just in case price gets to break this structure
Yes.
here. Okay. So if
Yes.
price gets to break this structure, that means that entry is not valid anymore.
Got it.
Yeah.
That was my question.
Yeah, sure. So that's on the new invalidation. Let's try to look for more examples on the new invalidation. And just in case anyone else has a question, you can be free to ask. Right here we have an example. We have this invalidation, and like price was making lows, we made a high, we made a low. After price breaking our structure right here, we had this structure. So this right here was our new invalidation, whereby price came to respect for the first time. Then also price came to respect for the second time right here. And we had this buy trade. And also you should be very careful with these structures. Some structures, some of the invalidations or new invalidation can be made out of a single candlestick. So you shouldn't ignore that structure just because it's made out of a single candlestick. They usually work and they usually bring a huge impact in the market. So that's all about the new invalidation. Just in case anyone has a question, you can be free to ask before we proceed to another structure. We also have another.
Oh, sorry.
Okay,
I was gonna ask, I know we're not talking about triggering trades or trades in any scenario here. We're just looking at the structure. My question would be, for us to trade these, would limit entries be the most viable situation? Because my question is, like, let's say in a situation, let's say where we're trading even the traditional invalidation, like when structure was formed, and let's say the low, let's assume it low changing into a buy. When the lowest low was created and price basically broke structure to basically indicate we're going up. We now anticipate price will, create structure before it comes back down and triggers the invalidation. Realistically, I don't expect we wait in the charts for that scenario, right? So do we trade with limit entries, or that's a future lesson?
Okay. About entries, we are going to study about it when we get into the fourth and fifth lesson. We will see how we usually get our confirmations before taking any trade. And we'll talk about the effects, like the advantages and disadvantages of using pending orders and yeah, and all of that ahead of us. So,
thank you.
Okay. Also, right here we have an example. This is our invalidation, right? And price got to break our structure right here. And we made a low. That means this is our new invalidation. So price made some highs and we came to respect our new invalidation for the first time. And we had another structure for the second time. So all of those were entries from that same new invalidation. And if you try to check very well, it made an effect from these structures too. That means we had our first entry, we had our second, and we had our third and our fourth entry right here, all from a single structure. So that's all about the new invalidation. And also let me add one other example right here. We had an invalidation, we had a new invalidation that was respected. So, yeah. Another structure we are going to check out today, I think it will be the last structure for today. It's called invalidation X. It's called invalidation X. So on the invalidation X, let's say we have this trend right here. Let's say we have a downtrend, and at this time we have a downtrend. So this is very, very important. I'd like you guys to give me your attention. Let me stop this video. So let's say we have this downtrend, then before price gets to break our structure right here, price will create another structure in between. This is very, very important to listen. So price will create another structure in between before breaking our structure right here. So after price gets to break our main structure, this is what we call invalidation X. So it will be anticipated that price could create some lows, respect on invalidation X. so that we can proceed creating more highs to the upside. So that's an example, just in case we have a downtrend. And if it's an uptrend, let's say we are creating highs, and before price gets to break our main structure right here, price will create another structure in between. That's when we get to break our main structure. So this structure right here is what we call invalidation X. We will be expecting price to create some highs, respect our invalidation X, so that we can proceed to create more lows. And on the invalidation X, we usually have two examples. This is the first example whereby we have the invalidation and invalidation X at the same time, okay? And I'll show you another structure whereby we only have the invalidation X and we don't have anything like the invalidation. So let's say we have this, we could have this downtrend. We have this downtrend whereby price is creating some lows. We have our invalidation X, but on the other side, we don't have any other structure. We don't have any structure. It's just a pure impulse movement. That means this is our invalidation X, and we have high possibilities of respecting our invalidation X so that we can proceed creating more lows to the downside. Let's also try to check out an example just in case we have an uptrend. So let's say this is our uptrend. We are creating highs. Then price gets to break structure. And this will be our invalidation X. On the other side, you don't have anything like an invalidation. So price has a possibility of respecting our invalidation X so that we can proceed creating more highs to the upside. Now let's try to go into the live chat. We check out some live examples. And just in case anyone else is having any questions, be free to ask. So we have an example right here, whereby we have this invalidation. We have this invalidation, whereby we are supposed to break our structure right here from this invalidation point. So before price came to break our invalidation point, we had our first invalidation X, and we had our second invalidation X right here, whereby price came to respect on our second invalidation X right here, and we had this buy trade. And also price came back to respect on our invalidation point right here, and we had this buy trade. And also
Nice.
any questions?
Yeah, I do.
Okay.
So first of all, there's something I guess I'm gaining here. It seems as if any left behind invalidation point, whether it's an invalidation X, new invalidation, or just a plain invalidation, as long as let's say in this scenario, as long as the lowest low that was where break of structure happened is not broken, then it's still potentially valid in the future. Because based on this example, it came down, created the low, went back up, broke structure, and then left two scenarios of you're saying of invalidation X, where the lowest scenario did not obey, but the second scenario obeyed. We gave us a trade as you indicated, and then it came back down and triggered the original invalidation as well. Oh,
Yeah, sure.
so as long Okay, okay. And then maybe the other question would be, in your two invalidation X scenarios,
Yeah.
it looks as if scenario one, the one with a previous invalidation, it happens if there is a trend shift. Like let's say if we were going down, we're now going up. And then scenario two is a continuation. I don't know if that makes sense.
Okay. So on this, let me first answer your first confirmation. So
Mhm.
this usually happens. All structures that we are learning can be respected on any day, any time, no matter what time frame. Okay. An invalidation could be created today. Let's say price, we could have this downtrend right here. We could have a downtrend. Then let's say we have our invalidation, let's say a new invalidation right here in the and an invalidation right here. So price could make some highs, do whatever it's doing, but uh, it could even take months or years or any time frame that could happen. But these two structures right here, as long as they haven't been disrespected by the market, that means they are still valid. They could even get to be respected on the next week, the next day, few minutes, or even the next year or next month. So as long as we understand that these are our structures, they have a high possibility of being respected.
Perfect.
Yeah, sure. And on your next question right here, I haven't actually got your point, but if I try to simplify things, from the first structure that we have been learning till right now, if you actually want to be accurate and let's say accurate with a strategy, you have to take it the way it is. Don't add anything or don't reduce anything on the strategy. It will actually help you. But if you try to let's say mix out stuff like this and any other strategy, you'll be confused since one will be telling you to buy and the other one will be telling you to sell. But till now, I can say that this is our invalidation X right here that wasn't respected, but this invalidation X right here was respected, and price came back to respect our invalidation point right here. Uh,
Precisely.
have
Now,
I
like,
answered your
I-
question?
I'm super sorry if I'm intrusive. Now, you see this example that you gave right now, this is actually the perfect examples. There are two scenarios for invalidation X, right?
Yeah,
The first scenario is we came from essentially like some form of a high, came all the way down, and we're creating lower lows until we created the lowest low, the one that basically gave us potentially the invalidation,
yeah,
and started moving all the way up. But then once it moved up, it did our invalidation X, the first invalidation X, the one down here, and then it went up, created and then broke structure. But then we in the future came and obeyed the two structures. But now what my question was, there are two scenarios for invalidation, right? The
yeah,
first one is the one with an invalidate with a previous invalidation, and usually it looks as if it only appears if we are like almost like shifting the direction. So like you see, it was a slowly like a downtrend of sorts.
Yeah.
And then it shifted into an uptrend. But then the second invalidation, the one that does not have a previous invalidation, is a continuation, if that makes sense. So it's almost as if when you find potential continuations, potentially see an invalidation X, the one that does not have a previous invalidation, if that makes sense.
I think you can try to illustrate.
Okay. Can I try to annotate? I think maybe don't move, go back to that very example. I think that is the perfect example.
Uh,
Labda, just can you help me erase just help me erase easy the lines, and then let me try to draw, and then I hope I
All
know.
the lines, right?
Yes, yes, the black lines, and then let me try to, I think, annotate or something. I don't know if I have the right. Do I have the right? Sijui sidhani. No, I don't have an annotation rights.
Okay.
I can.
It's
Okay,
something
so
like
let me
it's a
go on.
pencil emoji.
Okay, I think now I do. So what I was saying was, initially we clearly are in an uptrend, right? And then we had this situation right here that eventually turned into this swing kushuka chini.
Yeah.
We had our first low and we had our second lower low, right? Before potentially just heading back up. And the break of structure, as you indicated earlier, only happened up here. So this was our BOS, right? But my understanding of these two invalidation was once we came here, this was our like initial invalidation scenario. So if I were to draw it, this is the scenario. But in this particular scenario, this structure was not formed yet. All of this structure on our right was not formed. So we don't know what will happen. It came down, created this low, went up, swung a bit, and then created this invalidation X, right? So this is our first invalidation X based on current structure.
Yeah,
And
sure.
then after creating this invalidation X, we went all the way up, and then we created another invalidation X right here. Sorry, okay. I hope you're getting me.
Yeah, oh, sorry, let me.
Yeah, but yeah, somewhere there. So we created another invalidation X, which was this scenario. And until now, none of the structures will be triggered because we have not broken structure yet, right? And so price goes, breaks structure, as you're indicating, goes all the way up, does what it does, comes back down and obeys the second scenario of invalidation X. So we have our first trade, comes back and then obeys the original invalidation, which was our second trade in this scenario. Now, what I was in our two X scenarios, the first one appeared when there was a previous invalidation, right? The original invalidation. But it appeared when we were essentially in a short-term downtrend. So we were trending down and the invalidation was created with a previous invalidation when we were basically changing from a downtrend to an uptrend. So it's a switch of trend, I guess, if that makes sense. And
Yeah.
then the second scenario only happened when we were doing a trend continuation, because essentially we're still continuing to go up, but we can't have an invalidation because we're trending, if that makes sense. You can only have a previous invalidation because you're about to see the trend, if that makes sense. It's like yani ni kama kuna wimbi and then it goes up, like lakini wakati it's going up inatengeneza ka invalidation X, and so this becomes invalidation X simply because huku mwisho kulikuwa kuna the previous invalidation, and then the other one is only created and invalidation upande wa kushoto because we're now on a trend, if that makes sense.
Okay.
Okay.
So if I try to let me try
Yeah.
to explain.
Mm.
I think I made a quite your point. So what is happening? You can try to erase.
Yeah, let me do so as well.
No, it's okay. Let me just do it from here.
Okay, I'm stopping.
So right here, what actually happened is that so let's say well, yeah, right here. So when you talk about the invalidation, we don't actually talk about the break of structure. This is the actual break of structure. But when we are trying to look for the invalidation, we usually wait for price to break this structure right here, the one actually for the invalidation. So that, yeah, that's our first rule, to look for an invalidation. So before price came to break our structure, we say that we usually, if price creates any other structure in between, we usually consider them as invalidation X, whereby price made the first invalidation X, and price gave us the second invalidation X. And that's when price go to break structure. So till now, we have 3 entries, right? We have the invalidation, we have the first invalidation X and the second invalidation X, whereby this was our invalidation right here, and this was our first invalidation X, and right here is our second invalidation X. Price is actually, what can I say? We usually trade all structures and we treat them equally. We don't kind of, what can I say, like exaggerate any structure. We consider them all the same. So whenever price is approaching any of our structure, we usually consider price may respect any of our structure.
Okay.
Yeah. So that's why price came to respect this structure right here and also respected on this invalidation, but didn't respect on this invalidation X. But though I'm not sure if I actually answered your question.
I mean, to some degree, yes. Because essentially, I almost wanted Kariri to memorize that the two scenarios are different in the sense that the first invalidation X scenario is when we are, let's say if we were trending up, then we are about to go down, like a shift in the trend. So in this scenario, it was like it was trending down. And then when it was shifting to go back up, then we created our first invalidation X. But it's a first scenario because there's an invalidation. But then the second one was like a continuation. And so that's why we cannot have a previous invalidation. So I was like, one scenario is when it's trending, the other scenario is when it's changing trend, if that makes sense. But I think you kind of answered me.
Okay. The best way to trade these structures is to trade them the way they are. Like if it's invalidation, then treat it like an invalidation. If it's an invalidation X or any other structure, just take it the way it is. It will make things more or less complicated.
Okay.
Okay, so any other questions? You guys would be free to ask questions. Okay, then if there isn't any questions, let me add one more example.
Yeah, I wanted to say you can give us another example.
Okay. So let's try to look for another example on the invalidation X. Let's try to check right here if price actually respected. Yeah, price respected. So right here, price was making some highs. Like we made a high, we made a low, we made a high before price came to break our structure right here. Price created this invalidation X right here. Price created this invalidation X, and price came back to respect our invalidation X, and we had this downtrend. We had this sell trade right here. Any other questions till then?
My question would be, mostly we are analyzing on any time frame or mostly which time frame?
Okay, so on each and every structure are found in all time frames. They are found in the daily, the weekly, the monthly, the 1 minute, the 1 hour time frame. You can find them any place. And
Okay.
also, yeah, also I'm suggesting like at your free time, you should try your level best to look for these structures. Try your level best to look for many invalidations as you can. Also try to look for the new invalidations, also the invalidation X, so that you can actually train your eyes to easily see these structures at the time you're trading. So that's very, very important.
All right. And this is specific for which indice? V75.
No, you can actually trade any instrument,
Okay.
maybe any currency, any indices or crypto, anything you can trade with this strategy. Though what I actually do, I think this will be more explainable when you get into the fourth and fifth lesson. I usually trade a few. I trade a few to be more specific.
Okay.
Yeah.
Yeah, I think it's a bit hidden and a bit tricky, but I think it will not be easy to spot, but we'll try. I'll try personally.
Yeah, I understand. Actually, the beginning isn't easy, though. The more you practice, the more you easily see these structures. So if I can easily see them. I also hope you guys can easily see them too after doing some practice. So
So
then,
I have a quick question.
yeah, sure.
You just showed us two kind of invalidations. How often does one occur compared to the other one?
Okay. So all structures, we usually treat them the same, and they actually happen equally. Okay. Though when we get into our fifth lesson, I'll show you guys how to be selective, because price has a specific time to respect each and every structure. There is a specific time whereby, let's say the invalidation is more accurate than the new invalidation. So we'll get into that on the fifth lesson when we are talking about backtesting these structures.
Okay, that makes sense. So one quick one. You keep saying when you get to the fifth lesson, how long does that take to get there? I mean, but I just
you're talking about the time moment that it will take us to get into the fifth session, right?
yeah, that's right.
Okay, it's in the timetable. It's in the timetable though. Let me try it.
Okay, I might have missed that, but so
Yeah, on next week, I think next week on Thursday. It will be next week on Thursday.
okay, so thanks.
Okay.
Mr. Loki,
Yes, sir.
good chance here.
Okay.
I joined a little bit late in the meeting. I hope the meeting is being recorded.
Yeah, sure.
So, okay. I'm glad because I joined a little bit late, so I can't contribute so much. I hope I catch on with you guys after reviewing the recorded video. Thank you.
Yeah, it's okay. So straight after this session, I'll send you guys the recorded video to all of you guys. So yeah, just straight after this session, text me with the word video. It's very important, since some of you guys, I don't have your contacts. I think 3 or 2 students in Telegram. So text me in Telegram with the word video. I send you the video straight away.
Okay, so like, you supposed to know which students batch you will know you are with if we just send you the word video, yeah?
Yeah, sure. It will be easier for me to understand. It will be easier. So then I think I can send you guys the video right now. I'll download it and send it to you guys. So then you can, next time guys, we'll meet on the next session.
Thank you very much.
Okay, thank
Thanks.
And when
Thanks
is
for
that?
session one.
Okay, you're welcome.
It's in the schedule, Nkonya.
Yeah, sure.
Okay, sir.
Yeah.